Okay, everyone, and welcome back. And let's go on and get started with the bias chart here with the euro, which is over here sitting on its lows, despite some, unbelievably bullish PMIs. Obviously, part of the things that are weighing on the euro. Let me take a look at something real quick. One of the things that's weighing on the euro, obviously, the news with Le Pen. And so I mentioned earlier, some of y'all might have just stepped in now, that there was another story out. She's gaining, I think she's up 7 points or something like that in the lead, based on a gaffe that was made by one of the other candidates. Here's the deal. I mean, she's going to probably, I guess, win the first round, but there's a second round. It's the second round she's expected to lose. So I think things are getting a little bit overdone. And like I said, I'm on the euro. I'm down 14 pips, but I added on, and then I was able to scalp by that. So I'm not trying to, talk my book. But one of the things I pointed out to the people, I posted up some stuff on Twitter. I don't do too much on Twitter anymore, but let me go on and point this out to you, if y'all didn't see that. I mentioned it at the top of the show too. Remember this about 10 days ago, and we were looking at the bonds, and they were going higher and higher and higher. And I'm like, and I think at the time we had marked off, I think it was 52.28 or 52.30 as resistance. I said, well, I mean, they could maybe get to 53.04. I really don't see it, but blah blah blah. Look at the run up in this bad boy. I mean, people were probably selling their mothers to buy 30-year bonds. And then, no sooner they bought all the 30-year bonds and whatever the scare was, the wheels fell off the caboose. So here they were, everybody was scared, hanging on to their mama's skirts and buying all the 30-year bonds they could get, and then the wheels fell off the caboose. So I'm not saying that the euro is going to go and turn around and take off, although we had some great Eurozone PMIs. But my point was, I was saying on Twitter, is that sometimes markets will have a tendency to get myopic. And they only see what they want to see. So, I mean, if Le Pen, takes that first round, it's just the first round. She's behind, I think she's behind like 17 points right now, if it goes to a second round. So, I mean, we're getting a lot of hullabaloo over some stuff that hasn't even happened yet, that there would still be another part. Now, one of the other things that's dragging on is the story with Greece. But then again, that's been around since Moses crossed the desert. That thing's not going to get fixed anytime soon. So that's my point, is I think we're a little bit overdone. And it's not just that, but when we go back to the main screen, as I told you, we've got the FOMC minutes release tomorrow. And that's supposed to basically work. It's going to be like an event pivot for the dollar. Now, if the euro was trading here at 625 or, up in here, I'd be saying, yeah, maybe this thing's going to break low or whatever. But look how far we've fallen. So my point is, anyone who's been short is probably saying, I'm going to protect some of my profits. I'm not going to let this thing ride, because by the time the FOMC comes, FOMC minutes release, what if it's not so bullish? And on top of that, we've had the good Eurozone PMIs. We might be rallying up to 6. What the heck am I going to give away all my money for? I better go in and tighten up and maybe take some money off. And we saw that here, if you remember correctly. I didn't think it would have taken out 8, but it not only took out 8, it went up to like, what was it, 823? And here I was saying, it probably ought to fade in some, because we got the NFP. Well, I'll be doggone if the NFP doesn't come out. And here we are at 716, well over 100 pips off the highs. So that's what I'm saying, is that sometimes markets get overextended. I just showed you what happened in the 30-year bonds. Everybody was, probably, like I said, emptying out the piggy banks and everything else, buying all the 30-year bonds they can. And then we saw what happened with that. Before you know it, the wheels fell off the caboose, and 30-year bonds take a header for over 3 full points. Actually, almost 4 full points. That's $4,000 a contract. So, and that happened within just a few days. So that's what I'm saying, is everybody was grabbing for the mama skirts on the 30-year bonds, and then within a few days, not too long afterwards, about 7 days, we lose all of that and then some. So that's what I'm saying, is I just think that we're getting a little bit extreme here. Not that I'm some hero bull, but I'm saying is, as we go into the FOMC minutes, I would expect this market to go in and offset some of these gains here. But we'll have to see what happens. So let's take a look at the bias chart and try and figure out support, which I haven't even looked at right now at these levels. Well, let's see. Let's go and take a look at a fib. When we come in, we've almost come down and revisited the 61% that we're at. Last time I remember I was talking about a possible move all the way to 509. Let's see what that, if that would be, there's a 523. Right there, 486. Well, at this point, you have to be realistic, so I have to say 491. To be honest with you, so let's take a look. So we have to give it some leeway, so let's go with 491. I remember when we came down here, I was looking to get along with 516. We talked about there would be some bounce from 523, but I thought it would just be a minor bounce, and then we'd come down here when we get along with 516, said I might even see 509, and like I said, we stopped at that, 521, and then the market just kept on rallying from there. We're just some decent support here, so I would think that once again, ahead of the FOMC, people would take some of their money off the table. So, but we're going to keep this here, so we'll put 491. I mean, right now the news is about as bearish as it can get, but the crazy thing is, to me, and you always have to look at things in a bigger perspective, is those Eurozone PMIs just absolutely frickin' knocked the ball out of the park. So you have to think is, the reason I'm saying is I think you probably get a little bit of an offset is that what if the FOMC minutes are not too hawkish? And then when you look at the Eurozone PMIs, it doesn't mean the Euro is going to turn around and take off to 109, but you could end up seeing this Euro make a quick run to about 640. That's what I'm saying. So anybody short will probably say, you know what, I'm going to take some of that off the table right now because maybe some other people are going to go on the cover. I might as well just protect some of my profits. It doesn't mean that eventually the euro won't be heading south, but like I said, we're starting to see reasons why you probably don't want to be trying to put on shorts here. So resistance, let's take a look at resistance. Well, we've got this bias pivot. We've had this bias pivot since who knows when, and for good reason. It's held up really well. We talked about this the last time. Once it got above that bias pivot and it closed here, the doors were open for it to go higher. That's just technicals. What I like to do is I like to mix in, I try and basically trade the technicals. I trade the levels, and I have my little zones in here, my little colored zones. And then I try and mix in, I don't look at fundamentals, but I told you, is I look at the reports or look at what the tone is. You see what I'm saying? That kind of sometimes will help me from getting messed up or trying to sell a bottom or something like that. But we've got the bias pivot. That's pretty low. I mean, if you're day trading it, then yeah, that's going to be the key resistance, 568. But let's give this a little bit more objectivity, and it'd have to be here really. So we would need to have, in order to turn this thing around today, and this would be pretty good resistance, it would have to have a 2-hour close above 585. So let's call that resistance. Now, before you get to 585, you got that bias pivot. So if you're day trading, that bias pivot is all that matters. And that's 568. But like I said, let's say we get to things to turn around. You can see the dollar index is a little bit run out of gas up here at a very key level, that 101.56. But like I said, if we get going and moving today, then and let's say we get past that bias pivot per se, then any moves up to 585, they're going to really push back against them. So now let's move into the cable. And see how we stand. Now, I was still expecting another dip down here. So, thing is, the cable's holding up really well. And then we have that second view of GDP, which is supposed to be very good. So this thing is really holding up really well. For the short term being, I think we have to just go with this 23.47. This may even be too low because I don't think it may not necessarily even make it down there. And look how well the cable's holding up considering how the dollar's gone to very key levels. So at this point, we'll say 23.47, but it's almost as 23.62. But we'll give it 23.47. We'll give it a little bit of leeway. But it's holding up really well. It doesn't look like it's even going to come down here. So let's go with the 23.47, which is a 50% of the recent range. And resistance, resistance is going to be, and we're going to give it a little bit of extra room. We're going to give it a little bit of extra room to take into consideration, let's say because already the dollar's starting to shed a little bit. Not very much, but it's starting to come off just a hair for that key resistance. So we want to give it some extra room in case this thing really gets going higher. And it's going to be there. So let's take a look. Because this cable's really holding up really well. So it's going to be 25.12. And this thing is holding up like a champ. I mean, realistically, you have to say the resistance to support's really 23.62. We're just giving it a little bit of extra leeway for 23.47, which is 50% of this recent range of the low of 1986 to 27.05. But right now, you have to say this 23.62, but we'll give it the extra room. But here, it's going to be 25.12 on the upside. Let's mark this on. So next one's the Aussie dollar. This is now starting to look like it's getting a little bit tired up here. We marked off that 77.31 before. It ran out of gas. It's really having some trouble, and it came into our support here. We had that marked off. Now, we had this support earlier from last week where it was hanging up way here, but here's that old line that we've been looking at. It looks like we made a trip down there. This one is a very tough market to call. Let's go and get rid of these two things here. Kind of getting a little bit of a look of here, a head and shoulders, so to speak. We'll just go and mark those off just for. I'm just going to keep an eye on this thing. I mean, it's still in this area here, so it's not, but I mean, like I said, I want to just keep it, just to keep an eye on it. But it's not really a good formation. But we saw that work before, things with the dollar krona, and it was pretty much beat up looking head and shoulders, and I'll be doggone if it didn't go all the way down there and hit those targets off of that beat up looking head and shoulders. This was even a worse looking head and shoulders, but it is after a pretty good rally. You know, we look at things in, only thing is we've been sitting here in this range. But once again, you might, what I want to do is you always want to look at what maybe other people might be thinking. So you might say, oh, that's not a very good one. But then again, like I said, what you want to look at is, well, okay, well, you know what? Maybe other people are seeing the same thing, so any moves up here, they're going to try and fade it. It looks like it wants to go in. It's done a lot of work here. Unless the dollar is going to really sell off, but really the dollar, the Aussie dollar had a chance to run. Remember last week, towards the end of last week, with gold wouldn't go down to save its life, and the dollar was easing back a little bit, and it had every reason. And I forgot what they also had. Oh, I think they had the employment report, and that came out favorable, and we just weren't able to make new highs. So this thing, unless something dramatically changes, it looks like it needs to have a pullback. So we're going to go, I mean, it really found that support here, but we're going to move this here and say support is there. Just 76.09, which isn't that far away, 50 pips. Let's go with this 75.96 on the 23%. We do see, which I think we're going to start to see a little bit of correction. Let's call this to be support, 75.96. Well, we already had it marked out. Great. And let's take a look. Well, there you go. Resistance we have right there, 77.10, the top of this little zone, which would be above here. But I think he's going to have a hard time even trying to get there. Now let's go and move into the next pair. And that's going to be the Kiwi. So we had 71.23, and we almost got there. You can see it here. And then we had 72.30. It was just above the bias pip. So I think we were here last week. This was a holiday, and all this. So we thought we'd make it down here. This is our support, 71.23. We almost made it there. I mean, it's still support, but you have to look at this on a little bit broader perspective. We have this trend line, and like I said, it sounds like a broken record, but I don't do too much with trend lines, but I will when I feel that they're pronounced. And, you know, this is pretty doggone pronounced. 1, 2, 3, 4, even 5, 4 breaks. And, of course, this is now bearish. I said we'd have to get above here to start to get back to bullish. So it remains bearish, so it looks like we're going to have to go down for... you know, do further tests. Eventually, it looks like we're going to go down to 70.53. That's what it looks like. And we'll have to see what happens at that point. But on the short haul, we'll say support is here with the idea that it's probably going to break. Now, it doesn't mean we won't. At this point, we're pretty oversold. You have to look at it on an ultra short-term basis, which is... Notice how we took out the lows here. You see that? I'm going to go in and... See how we took out the lows here? Right there. Those lows, and we took them out. Look to your far right. See right there, we took out those lows. So they've already clipped the stops, and now they're moving up. So my guess is we'll see some short covering, okay? But that's on an ultra short-term basis, but on a little bit longer-term basis, it looks like we'll eventually come down here, and that's where we'll probably find our support, which is going to be 70.99. Let's mark that off. So let's take a look at the resistance. For the short haul, it's going to be the 71.87. And we can even maybe move it a little bit more. Let's take a look. Because we are thinking we're going to get a little bit of a bounce now. Because we took out the stops. Look, you see here? We took out this low here. So we were able to blow some stops now and come back up. Resistance is going to be 71.91. Because that'll come. See right there? So we'll mark 71.92. And we're going to have to say now that this is bearish because it's now going to start to roll over. For a while, we're giving it the benefit of the doubt, saying there's a range, but we're going to have to mark this as bearish. And I think eventually we're going to get down here to 70.53, all things being equal. So let's go and take a look here at the dollar CAD. This has been surprising. I thought that we would be breaking down. And the crazy thing is, I can tell you this is crazy as all get out, is look at the crude oil. Crude oil's rallying, and I understand the dollar is moved higher up here, but, you know, shoot, you would have thought that they'd been battling down here, not up here. So it's a little bit, quite of a surprise here. So let's take a look at where we're at now. Resistance would have to be the top of the zone here, which they never did. They fell just a bit short the last time. So it's going to have to be this 31.28, which is a long ways off, but we're going to give it some room. I'm surprised. I thought we would fiddle around here and then try to break lower, especially now with crude oil rallying, and it didn't make any difference here. So it's really a bit of a surprise. But we're going to give it once again. We're going to give it that extra leeway. So resistance is going to be 31.28. The thing, I mean, on a short-term basis, you can see where if it broke a trend line here, but I mean, with crude being stronger, and you can see that here, it even looked like it was going to run out of gas. It broke above it, and it's going to run out of gas, and I'll be doggone if it doesn't blow here, I guess, on this most recent run-up with the cash dollar index, but now we're kind of giving it back here, I guess, basically what's happening with the crude. So it's just kind of like all over the place in some ways. But it looked like, okay, they got above the zone here, and now they look in trouble. So it looked like it was easy pickings for a move lower based on with the crude, and then we turn around, we rip higher and clean everybody out, only to now start to get back those gains. So we're going to go with this 32.18 for resistance, and I'm still more of the ilk that it'll probably come in, but it's holding up way better than I would have thought. So we'll call 32.18 on the resistance. Support You got this 3083, we're going to say right there. You can see that right there. So just a hair below that, and support's going to be 3071. And it's already time for a break. So we'll be back. And thanks for joining us here on the Morning Edge. I don't know why this thing's not.